All right, let's jump into it. Where we at? It is 1:29 p.m. on the 5th of September. So NFP Friday, first Friday of the month, of course. All right, so let's jump into a little bit of data we had overnight. So again, look, the big sort of topic at the moment, or the big sort of headline with everything is jobs, jobs, jobs this week. And overnight we had a couple of bits of data. We had ADP, which came in a touch lighter. We had the jobless claims, which actually sort of where are we here with the jobless claims? This was so catching up on the sort of stuff. So let's go piece by piece here. So we had ADP. So 106 previously, 65 expected, came in 54. So a touch lighter with that. Now, I sort of heard a bit of a sort of response in this in the sense of like, because I mean, look, it's not that bad. 9,000 missed, that's okay. But I think sort of they were sort of looking at it more in the sort of percentage kind of terms and that. And in the percentage kind of terms, it's a bit of a miss, but which makes sense. So, yeah, guys, look, if you're booking in 150, 160,000, whatever, and then you miss by nine, well, okay, it's a marginal kind of miss. If you're missing by nine when you're only expecting 65, okay, it's a bit of a larger sort of percentage cut with it all. But in saying that, the market did not really kind of care so much in terms of sort of US dollar response to it all. So with this kind of thing, if you are looking at the percentage and going, okay, well, this is actually a little bit worse than we sort of thought, which apart from the fact that it's worse below the sort of estimated amount, um, you would have expected US dollar to probably sell off a little bit. But for the most part, actually, it kind of not sort of drastically strengthened, but it did move in that sort of slightly more positive direction after these bits of data that sort of came out. So certainly this is one in the camp of sort of like, okay, well, they're talking about jobs, power's been going on, this is the big thing. Well, this is kind of what they're kind of worried about is a slowing with these bits of data coming out. And of course, ADP coming in a bit lower. Jolt's coming in a bit lower. NFP tonight is going to be the big one. NFP was always going to be the larger of these sort of bits of data, as it always is. But I think this time it's starting to sort of shape up as something that could start to move the market again. Because for so long, inflation has been the front runner in terms of what the Fed have been looking at. And I covered this yesterday, but the responses from a central bank, but in this case the Fed, in relation to inflation being the main issue, and then the response of what they or the way that they may act, the levers that they may pull, so to speak, in regard to jobs. I, all right, I'm back. And the had an alert go off with a as a thing. So using these headphones sort of while recording these and having the alerts going off. Jesus, like caught me, caught me off guard. Anyway, so what I was saying, so yes, the response from the Fed sort of acting on inflation opposed to how they sort of act on jobs are very drastically different. And for a long time, the inflation has been the front runner that they've sort of been looking at. Now, NFP, oh, well, sorry, jobs is more the sort of front runner, NFP being the big one. I call them sort of like second tier bits of data, CPI and NFP. Everything else is slightly less impactful and slightly less sort of repercussions kind of sort of evolved with it all. Like, you may get knee-jerk reactions, they may last for a day or so and that, but, CPI and NFP have the ability to kind of shape the market for, the coming month. And, at least in this case, up until sort of the 17th, which is less than 2 weeks away now when we have the FOMC. So this is why today's numbers are going to be very important because if we get a high print here, which is not what the market's expecting. So if we get a high print, it throws into doubt a little bit of how much the Fed are particularly going to, if they're going to cut, how much they're going to cut. Because really the talk at the moment is 25 base point, and that's like 95% sort of priced in, so to speak. Um, if they do get a high number here, well, it goes, well, okay, jobs is the thing that, they're going to need to act on. The jobs aren't in a bad way. This is if they get a high print. So maybe there's a chance that they won't cut. So it goes between 25 base point and holding. And if that were the case, then you're going to see US dollar probably push up a little bit there because people are sort of basing it on, well, they're going to cut. As I said, 95% priced in that they're going to cut. USD, so DXY in this case, has just been hammered in line with that. If they have a bit of question and a bit of doubt on to the amount, so if that 95% priced in pushes back down to say 80% or 70%, what's going to be the repercussions? And the repercussions of that is going to be a bid onto the US dollar while people peel back a little bit of their dollar short positions. So they're priced for 25 base point because everybody's there, and you can tell this 95% priced in. So that's why we're at the position we're in right now. If that gets thrown into doubt, so it goes back to say 80% priced in, that means there's a little bit of doubt in there, obviously, a greater amount than there is currently at these current prices. And the way that will reflect in the market is US dollar catching a bid. And that's the reason sort of why we'll see this thing move up. So if they get a high print, US dollar catches a bid, probably gold sort of cools off a little bit. You'll see Aussie dollar will sort of obviously sort of get sort of knocked down a little bit from that as well. But the same is true in the other direction. Excuse me. But so if they get a high print. If they get a low print today, like drastically low, then that could throw into question a couple of other bits and pieces as well. Because if they're in line but slowing, if you get it within the ballpark, if it's not like a drastically low, if we go sort of like, in the mid range of it all, so say it comes in line, maybe a couple of thousand underneath, that kind of really sort of just almost sort of guarantees the idea or backs up the idea of like, yeah, we're looking at jobs. If jobs are weakening, this is another sort of continuation in that trend of jobs weakening. So they need to do something about it. They'll cut 25 base point. So I would imagine that sort of like, you're going to see US dollar sold off further. You're going to see gold obviously appreciate a little bit more. Gold's actually breaking up a little bit higher as I speak at the moment. But so that's the sort of outcome if you get it within the ballpark. If you get drastically low, then that's almost to sort of put things into question because drastically low is okay. Yes, we do need to sort of act about it. So I'm sure gold will definitely get a bid on that one there. And I'm sure US dollar will definitely get sold off. But then you got to sort of look at what potential impacts that could have on the equity markets. And I think that could be the recipe for gold to really hammer because you got to think there's a bit of capital in all of these pools. And if US dollar is going to be sold off because they're going to cut, equity markets will be spooked by potential recession fears. That'll be sold off. Well, that is like two lots of pools of sort of capital going somewhere. And if the pools of equities don't go into the US dollar, they'll probably move into hard assets, which in this case would be gold and silver. And that could be the recipe for gold and that moving drastically higher. So I think they're the sort of three outcomes today. To sort of see what we can sort of expect from sort of NFP. So if we actually sort of flick onto where we're actually coming up to NFP tonight, so 73 is consensus, expecting 75. So 73 is previous, expecting 75. So in that ballpark there. So if we get 100 plus, I would say US dollar catches a bid. I would say maybe sort of like, and this is really, I can't be a definitive sort of person between these kind of numbers, but say it's around 65 to 80, you get, or 65 to 75, you get a little bit of a sell off, but it kind of like sort of, I think that gives the tick for the 25 base point cut. If you get sort of like 20 or negative, then I think that's when you're going to see equity markets sell off at the same time and gold will really rocket. That's my kind of feeling, my kind of outcome. We'll see how that happens with things. Unemployment rate looking obviously as well to sort of push up there a little bit. If this is another one to look at, that if this sort of pushes up a lot higher, that's obviously still in the camp of, okay, well, cutting is probably something to help address that issue. So, for the US dollar to catch a bid, you'd want 4.1% in unemployment. You'd want plus $100,000, plus 100,000 jobs added. That would sort of make the market go, oh crap, hold on, wait, maybe they're not going to cut and maybe we're going to see things move up. Whether that comes or not, I'm not an authority on, I can't say, obviously, but that's the kind of setup in terms of data that I foresee for US dollar to actually sort of catch a bid through this. But certainly at the moment, it's looking like US dollars under a little bit of pressure. So I might as well jump onto the charts just while we do this. So go DXY here. Um, and as you can see, it's kind of like found itself this little range up in the top side of the larger kind of range. So if we get the bigger sort of range. So this is a range that we've been sort of playing in for, what's this, couple of weeks now, I think, to get this alert out of the way. Where we at? So start of August, so a month. It's just been bouncing back and forth through here. And this is why I said I thought it would be quite interesting to see where it is coming into today's print, because obviously now we're coming back into this little midway point, which I've covered a couple of times, and that sort of throughout this week, which, this is the same level. This is where the Cook headline came from. It's been a sort of rejection here. It's been a support. It's been support here. Like this pinpoint, support, getting tested again now as well. So did we leave a little gap? We had a little gap down this morning. Look, I'd pretty much call that close. I mean, technically, there's kind of a little space in there. So, with these things, as I've said a couple of times, if they don't close the gap straight away, then it leaves it a magnet for the Euro session. So, we could see this sort of appreciate and bounce back up through this sort of Euro session here. RSI sort of pushing down here a little bit. It's looking like a pretty negative little sort of run from the sort of highs that are put in overnight. So I think this is definitely going to be the crucial area. Still with this alert underneath these wicks that we had from that bit of data the other night. I can't remember what that was, the jolts, where it sort of like got smacked down here on jolts. So I think sort of like if we could sort of close or come into the NFP in this top area over here, it gives you that leeway on a bad print to come down here and sort of see and test if the buyers are already here. If you're already sort of down over here as we come into the NFP print, that puts you very much in risk of breaking down. And this is probably where we're looking at minimum coming down into 97, 97.14. And again, it really sort of depends on what that print is as to sort of how far this thing goes. But, as we've seen, the market, when it sells it more recently, it happily sells the crap out of it. And this is what I was saying, that sort of like it's got like this is the. Was this NFP? This wasn't NFP, was it? Yeah, that was NFP. Yeah, first Friday, first. Yeah, so that was NFP last month. That's the kind of sell down. Obviously, we haven't even got close to sort of revisiting that level. Then we've got the sort of the Jackson Hole kind of thing that obviously undid. But yeah, so look, if the print comes in bad and we're already sitting in this area over here, that's pretty much the time to break down. Look, there's a chance even if we do get a little bit of a rally through Euro session as the market kind of sort of positions itself coming into it, you could still sort of see it push down to these levels over here. I think it really just depends what that print comes in as. And as I said, considering all options with it all, if the market does actually sort of come out with a stronger number, lower unemployment percentage, that could be the reason and the time that we see the breakout and the move back up over here. Look, there's a lot of places for it to sort of hit over here, like in terms of resistance levels, yada yada with it all. But the big thing is getting out of this range. So basically with a range, I guess we could sort of say that this is the size of the range. So measured moves from ranges gives you projected prices pretty much like this. Yeah, give or take a couple of points in that. So they're probably the positions, the places that you'd expect the market to move based on the prints. So if we get a high print, low unemployment percentage rate, that could be the thing that sort of gets it out the top. You could probably look at maybe sort of up around that 99.3 kind of level up around here for a move. It's not necessarily just going to rocket in one move. I think we are going to get a pretty fast move whichever way it moves. And at the moment, look, it's hard to sort of be the contrarian trader to this because, US dollar selling is just like the thing to do. But again, it's about sort of like planning for both outcomes and then trading the sort of outcome of the data that comes out. Because whether you believe the data or not, this is what's going to be presented to us, and this is how the market's going to react to it. So it's just about sort of being sort of positioned or planning for those sort of outcomes and being able to enact it when they come. But as I said, yeah, look, if we get a stronger number, that's probably where we're sort of heading up around that 99.4. If we get a weaker number, I'd say around, look, we've got a support area through here. If we break through that, I don't think this measured move is going to hold. I would say you're probably looking to test the lows at 96.40. But that's a long way down, and that, that's going to be another, I don't know, $50, $100 on gold at least, if you're getting down to these areas over here as well. So yeah, it's certainly going to be quite interesting. This seems to be a bit of an irrelevant line now. I sort of thought maybe it would hold for a little bit. This possibly might be a bit more of something. 3 touches through there. Not really sort of super keen on that number. Anyway, that line, sorry. So yeah, we'll see how we go. Main thing at the moment is whether it can hold this little midway point. A break under this midway point, you're probably going to look to sort of test that 97.7 prior to the data. Tip on to gold. Had an incredible sell-off yesterday in Asia, and I saw it was attributed to, anyway, the China sort of making some sort of thing about speculators shorting their markets. That's what supposedly it was about. I don't know as to sort of whether that was the actual sort of driver or if it's just a little bit of profit taking coming into these events over here. But certainly with one here, this is what we were kind of looking at yesterday. That yeah, I was sort of saying, look, this is a little box. If you break under here, we're probably moving up. I probably thought this may have sort of actually drifted a little bit higher, but it seems to have obviously found itself a little bit of a range through last night, shot up on Asia Open, and for the most part has actually found itself a little bit of a range through here as well. A little test out the bottom, test out the top now. Look, I'd be surprised if this thing sort of continues coming into the sort of data, but gold is still incredibly bullish. I mean, it takes more than one sort of pullback to sort of break the market here. But certainly it's poised for itself to continue, and this to just be a bit of a pullback and a reload to go probably much higher, as I said, well into the 36s, I would say, on a weak number, particularly if we see US dollar sort of sell off. That's going to be the ticket for this thing to really rocket up to the top side. Inversely, though, as I said, if we do get that outcome with a stronger number, then you're most likely going to see them peel off a little bit of US dollar. You'll probably see them peel off a little bit of the gold sort of longs here as well. So certainly, I think there's room for both of them to move. There's a little rising support sort of coming through here. But I think sort of most likely sort of coming into this data, probably sort of around this sort of maybe mid 40s to mid 50s kind of little band. I wouldn't be surprised. It tested out the bottom here. It's moving out the top here now. Maybe it sort of continues, but most likely I think this, I probably expect to see maybe, if anything, just to sort of roll and sort of continue in this little consolidation patch coming into it. Aussie hit that zone pretty much perfectly. So this is what I said in the video. If we gave up 20 yesterday, that look, it was a bit of chopping, but it did get down to there, and sort of so basically it's respecting the market exactly. The chart exactly as we kind of sort of thought it would. Filled that wick, tested the main sort of 65 round number, and then dribbled back up ever since. And it's really just in a bit of a holding pattern with it all. It's funny. I said yesterday I never put curved lines on. I thought, look, you know what? Let's experiment with these curved lines, see what happened with it all. To me, it seems a bit sort of hocus pocus. So you know what I'm going to do? I'm going to zap them because this is a bit silly, to be honest. But what we are sort of seeing here at the moment is obviously sellers are still putting in technical lower highs, putting in sort of high lows with the buyers. I think this is going to come to a point soon where these two converge, and whatever breaks is going to give us our direction. And obviously NFP tonight is going to be that case. So stronger number, we're going to be seeing this sort of come down a little bit. Higher number, weaker number. We'll see this thing sort of break out to the top side and probably challenge these numbers over 65, 65.70, 65.80. They're the kind of breakout levels that we could probably expect to see a bit more sort of upside into the 66s should it sort of test and break through those levels. This worked a little bit for yesterday, but I'm not really basing too much off it at the moment. Really, it's just a bit, I mean, you could almost just do this. Bit of a triangle sort of coming in here. But as you can see, it's converging down into here. So that'll probably be your early indicator But realistically, those two levels there, which are your swing high and your swing low, they're your confirmations of them. So this is why it's good to sort of use a bit of a mix. Whoops, a bit of a mix of obviously horizontals as well with a couple of these sort of like trend line. Excuse me, trend line sort of rising supports and falling resistances in this case. So it's yeah, not really a great deal to sort of take away with this. I mean, generally sort of prior to these large bits of data and that, you don't get a lot of movement. This thing's just grinded up here. As you can see, there's no sort of big sort of fast action moves. It's just really as US dollar slowly sells down, this is just, you know, proxy basically of it all. It's just by default sort of getting a little bit of a move up there as well. Copper came back and as I said, I covered this yesterday that it sort of like had come up and clipped this range pretty much to the thousandth of a cent and come back down. We saw it sort of sell down quite hard overnight. There was another bit of sort of you know, headline kind of thing said, hey, copper's back on the bid this morning. Um, you know, it's all negligible. I mean, if you look at how much this thing moves and how much it's been moving this last month, it's not really doing anything. As I said, break this range, you've still got another resistance just above you. As I said, it's kind of a bit of a snoozer, really, this one here. That's just an incredible low for that one there. That's just insane. And it's going to make it very difficult for this thing to regain up over here. And China, so USD 1. So as you can see, it tried to hold this little back test through here. If we zoom in a bit more, you can see it. So this is the level of the buys. You can see it's moving up, moving up, moving up. Try to hold, and it's given it up this morning. This goes in line with gold being a little bit more bid. It goes in line with Aussie dollar sort of drifting up there a little bit as well. So we're back down, sort of testing this next sort of little support area here. I mean, look, I've done it sort of with these buy things just for the sake of it, but obviously, you know, that's just a zone through here. I don't need to do it. We can see that this is where the buys were previously. Needs to hold this level. If it doesn't hold this level, most likely you're coming back down, testing these ones over here at 712. So I think sort of first things first, basically through 715, gets you back up into this area. We do have a sort of a falling resistance coming along through here, which will sort of no doubt garner some sort of reaction. But at the moment, you're looking for this thing to completely turn around and push back up over here. The price action does not dictate this at the moment. You're seeing lower highs, you're seeing a dribble, and obviously now it's taken out the low. It looks like it's rolling over and it wants to probably sort of continue back down to these levels down over here. Upside though is obviously through 715, and then you've got a number of levels to deal with over here. But again, this is going to come with general US dollar strength. So if we get those numbers higher, this is going to push up. This pushes up, you're going to see it on Aussie, you're going to see it on gold, and this is how they all sort of work together, hence why I sort of chart these ones all together each day. So look, that's pretty much it. Not really a great deal to take away from this thing, but as I said, sort of like prior to these prints, generally the market's in a little bit of snooze mode, so I'm not really expecting a great deal. I saw equities, well, at least US equities back to sort of all-time highs. Aussie's still sort of weak a little bit, the ASX. It has bounced up a little bit. I think sort of where we are. So it's not that fun for you because I'm on the thing here on a different screen, but just for the sake of it all, just hit the 61% of the last drop down. So with that, actually, I do have it on here, don't I? Which one here? Again, experimenting with these curve lines. Where are we at? Of this last leg down through here, it hit just the 61%. So we can see this through here. So this is only sort of basically this leg coming through here because obviously we put in the low there, bounce back up. If you wanted to take it from the full move of the high, it's at the 50% retracement of that lot there. But as you can see, 61% obviously sort of came in pretty much smack bang on. And we've got a little bit of a rejection down there. It's pretty overbought. So I wouldn't be surprised if we do at least see another drive down towards the lows here before we sort of see it sort of, if it's going to sort of continue back up, see the buyers sort of move from here and then see a move like that. That's what I'd be looking for if I was trying to sort of buy this thing. I mean, look, this has been the year of the V-shaped recoveries with every single sell down. Anytime something's sold off, you buy it, well, you're in the money a day or two later. And a lot of this, I think, really does come from such US dollar weakness. I think people are just sort of going, okay, look, we got to sort of park our capital elsewhere, mainly US and that, of course. That's why gold's been pumping. That's why equities have been pumping. But there'll be a turning point. There always is. You know what I mean? It will turn around at some point. People will see some sort of value in US dollar, and we'll see these things. We'll see DXY appreciate. Um, and as that happens, then we'll see the capital drain back out of these things a little bit. Like, you know what I mean? It has been on such an absolute rip. Like all of these markets have ever since April. I mean, these sell downs here lost like 20%, and look at it, it's just been going up like a monster. So, you know what I mean? These things don't go on forever. It certainly does look like it wants to roll over here a little bit. Buy the dip has worked 1,000 times, so why not one more? But, you know what I mean? There will be a point where these things, the buy the dip won't work, because the better option will be to have the people buy the dip here and then sell into it there. Have people buy the dip, sell into it there, and that'll feed a move that'll sort of come back down a little bit. So I wouldn't be surprised if we do see some sort of pulling back, over the next sort of 8 months or so. But for now, things, they're still technically just a whisker off the very highs. So we'll see how we go. All right, that's it from me.